artificial intelligence training costs are dropping 68% per year. Think about that. We've never seen anything like that. AI is going to be a part of every industry. Value investors are using price to book and dividend yield and that sort of thing. We're using growth. We're using spectacular growth rates that no one is expecting. And Tesla was our first proof of concept, I would say, a very visible one, where people were saying, what are they talking about? And all we had done was used Wright's Law, which is the centerpiece of our research, to try and figure out how quickly costs would decline in battery pack systems, and therefore how much prices would fall for electric vehicles and how quickly the uptake would be. So Elon, you had auto manufacturers and auto analysts laughing at him. Elon is building his car on top of cell phone batteries. Isn't that funny? And what they didn't believe was that the engineering was possible.
Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in today's video, we're answering one simple question. What would Cathie do? Well, what will Cathie do in terms of Tesla stock? And what's the point in the future where ARK Invest will sell entirely out of their Tesla stock position? By the way, you guys know the drill by now. There's a link in the description if you want to pick up your own What Would Cathie Do merch, shirts, mugs, hoodies, and more. And fair warning, if you're wearing this merch out and about in public, expect a fair few people to ask you one question. Who the f*** is Cathie? In this video, Cathie Wood shares a lot of insights, including her thoughts around the incredible progress and declining costs of artificial intelligence and how important it will become in our everyday lives in the coming years. Cathie Wood also discusses how much she's expecting to see Tesla stock grow in the future, and also her most recent thoughts on Bitcoin. So with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin Rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously, free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it.
Auto sales, many people don't realize this. In the US, peaked in April at 18.5 million units and are now at 12. Now, that is not just chip shortages. Yeah. That is, I bought my car last year. I'm probably never buying another gas car again. I'm going to wait for an electric vehicle. That's what I think is going on, or some of what's going on.
Right.
So if we're right on that, then I think there's a lot of double and triple ordering in the system right now. This happens at the end of every cycle, and certainly when there is talk of shortages.
Building up your inventories, whatever they may be.
Toilet paper, tissues and all of that, Clorox. And so I do believe that after Christmas, we will see the other side of this. And we've already seen it with lumber.
So then there's an easing, you think, then?
Yes. I think a lot of prices will unwind.
So inflation is transitory?
I think it is. I know that's a dirty word now, but I think it is. And there are 2 other reasons I think it is. There are 2 very powerful secular forces. So what we just discussed was cyclical.
Right.
The 2 secular forces, one is good and one is bad. The good one is innovation. Innovation is inherently deflationary. And because we do the analysis using Wright's Law, we can tell you how deflationary. Just to give you a sense, artificial intelligence training costs are dropping 68% per year. Think about that. We've never seen anything like that.
Boy, oh boy, I sure would like to be invested in the stock of a company or any companies that happen to have a huge interest in artificial intelligence, have hired some of the world's best artificial intelligence talent, have a great path to integrate artificial intelligence more and more into their business over the future, and are investing in new hardware for training artificial intelligence at scale. Can anyone think of any companies like that? Let me know in the comments below. I'd really like to own some of their stock.
And artificial intelligence is starting really a technology war. The companies with the biggest pools of data, the highest quality data, the best AI expertise.
Can any of you guys and girls think of any companies with a large pool of data, a large pool of high quality data? The best AI experts in the world, for example, maybe the world's leading computer vision expert, something along those lines, who may also recently have held a large AI recruiting event and seen a 100x increase in applicants for their artificial intelligence jobs in the following week. I sure would love to own a stock in that company if such a company existed. Let me know in the comments below.
With the best domain expertise in the genomic space, curing disease, and here's the incentive, so the human being has to set the goal and the reward system, but the machine's now just training itself, and those costs are dropping 68% per year. AI is going to be a part of every industry, and that's not the only one. DNA sequencing is deflationary, robotics is deflationary, blockchain deflationary. It's taking all the middlemen out of the equation. Massive deflation, which is going to hurt companies who haven't spent enough on innovation but have leveraged up to satisfy short-term oriented shareholders who want their profits now and their dividends
and
now.
Not thinking longer term.
Man, it really sounds like Cathie Wood and ARK Invest are quite bullish on artificial intelligence. I just can't think of any companies to invest in to take advantage of this obvious boom in artificial intelligence in the coming decades. Such a shame.
Value investors are using price to book and dividend yield and that sort of thing. We're using growth. We're using spectacular growth rates that no one is expecting. And Tesla was our first proof of concept, I would say, a very visible one, where people were saying, what are they talking about?
By the way, in case you have a short memory or weren't following the Tesla and or the ARK Invest story for too long, Cathie Wood ain't messing around. She used to get ridiculed constantly for her Tesla price target to comments about the company, comments about EV adoption, etc. Not just questioned, not just quizzed, ridiculed repeatedly. She was a laughingstock of the mainstream finance media for years, until she wasn't.
And all we had done was used Wright's Law, which is the centerpiece of our research, to try and figure out how quickly costs would decline in battery pack systems, and therefore how much prices would fall for electric vehicles and how quickly the uptake would be. And we saw Elon Musk, magnificent things happening in terms of
But it wasn't
cost.
so easy to be invested in Tesla early on.
For us, it was easy.
Man, can I relate to that comment. Now, for those of you that don't really understand why this may have been the case, if instead of throwing darts at stocks, you've actually done your homework, extensive, thorough homework, really drill down to a company, the technologies involved, and have a comprehensive understanding, have built up your conviction, have a strong reason and a really clear investment thesis. Holding a stock that isn't doing anything, that's facing a tsunami of FUD in the mainstream finance media, has heavy short interest, is being laughed at constantly by the talking heads on the likes of CNBS and Yahoo Finance. Not a problem. These guys don't know what the fuck they're talking about. Why should I care? I've done my homework. I understand what's going on here. If they don't see it, if they don't get it, not my problem, doesn't bother me. Anyone remember back in March 2020 when Tesla stock had collapsed about 60%, people were freaking out, panic selling, thinking nothing would ever be the same again, this is the end of the world, and then it wasn't. And all the while I was buying Tesla stock, selling all my other stocks to do so, and also making videos about it and explaining why Tesla would recover, gain market share during this time as well, and other automotive manufacturers wouldn't fare so well. And by the way, just a quick aside, if you weren't watching the channel back in March 2020, or you did and you've forgotten, or just want a refresher about how I pulled out my crystal ball and literally predicted exactly what was going to happen through the pandemic during the moment of peak fear, check out the card in the corner. I literally called everything that would happen ahead of time. The reason that I point this out is pretty simple. Again, I'm just trying to make the point. If you've done your homework and you're also not an idiot, no offense to the idiots out there, I mean, hey, we don't pick our DNA. It doesn't really matter what other people are saying. You shouldn't be swayed by their opinions. You should be making decisions solely based on what you believe, you think, based on your homework, your research, your understanding. Even if that means that the consensus opinion is going this way and you're going that way. If we're being honest, being a sheep is easier, but it's far more dangerous.
Because you just believe the story, or?
The most important call that we made initially with Tesla was, all right, Tesla's battery technology is unlike any other auto manufacturer's battery technology. Tesla was riding down the cost curve of the consumer electronics industry. So laptops, cell phones, huge volumes, right? And when you get a scaling like that, costs come down. It's called a learning curve in the tech industry. So Elon, you had auto manufacturers and auto analysts laughing at him. Elon is building his car on top of cell phone batteries. Isn't that funny? And what they didn't believe was that the engineering was possible.
Right.
So there was it wasn't, they just didn't think it was possible. And he did. And so even today, these cylindrical batteries that he's been using relative to lithium-ion pouch, lower cost and will remain lower cost for at least 3 years, we think, which means that any other auto manufacturer who wants the same performance and the same range at the same price will have to lose money on every car sold.
Great point, highly underrated. Let's talk about this more. A lot of investors fail to understand that there's other automotive manufacturers out there today who are promising vehicles or soon to release vehicles with comparable specs to that of Tesla, but they don't appreciate the fact that to do so at a similar price point means they'll be losing catastrophic amounts of money on every single one of these vehicles produced. Tesla is so far ahead in terms of their technology and their scale that it is literally not possible to release a comparable product for a comparable price without losing $10,000+ on every single vehicle. Clearly not a sustainable business model.
So it keeps him in a really great position.
And that's only one of 4 barriers to entry.
Well,
but that was the first call we had to make.
So Elon Musk and Tesla. So there is a point that you would get out. I know there's a story you've talked about. You put a mark on the stock price. I think it was 3,000?
Yeah, 3,000 is our base case, not our bull case, but our base case.
Okay, so there is a point where you could say, okay, I'm moving on. You've gotten out of Apple. I mean, these are backward-looking companies or technologies that you don't think are, or not necessarily?
Not necessarily. They are very well understood. Their dynamics are well understood. They are the FANGs.
Right.
They're well owned. And we just want our clients to be exposed to the next FANGs, which are not going to be in the FANG category, but the next FANGs. And Tesla's becoming a FANG. You know, I think it'll end up in that grouping at some point.
Ladies and gentlemen, the moment you've all been waiting for, or just skipped ahead to, when would Cathie Wood and ARK Invest sell completely out of their Tesla stock position?
So, we would sell. So our minimum hurdle rate of return expectation for a stock is 15% at an annualized rate over 5 years. So a doubling over 5 years. Tesla is about nearly a quadrupling over 5 years, so well within our range.
So, did you guys catch that? First of all, Cathie Wood and ARK Invest expecting Tesla stock to increase about 4 times in the next few years from where it is today. Not surprising. I won't be surprised, in fact, if it's quite a bit more than this. But also gave a fairly clear answer there. If Tesla's stock, if they expect that it's going to grow at less than 15% over the next 5 years, basically doubling every 5 years, that's the point of time where they're selling out of Tesla stock because it's just not meeting their threshold for growth. Now, between you and I have a funny feeling that ARK Invest won't be selling out of their Tesla position anytime this decade. After what was unveiled at Tesla's AI Day, I expect that ARK Invest will eventually update the Tesla valuation models to include artificial intelligence more broadly, AGI, the Tesla bot, and realize, oh shit, son, we are just getting started.
So, you know, we have been taking profits, and that's because Tesla in here, I think it's becoming very obvious now that electric vehicles are taking massive share from traditional gas-powered vehicles. And so the stock finally is responding to that reality, because that has been true.
Bounce back.
Yes, it has, whereas much of our portfolio has still been in a bit of a weak spot. So this is called portfolio management. That's all this is.
Well, I've said this is what I remember from the first day and talking to you and just being kind of pulled into it. What do you say? You become a celebrity fund manager, and maybe an unlikely celebrity, which is what everybody seems to write. I mean, how do you feel when someone says she's an unlikely celebrity? And they're tough on you, especially when the performance isn't there, or it's not where it's been.
Right.
How does that feel?
You know, I've dealt with this all my career, except it's usually been inside firms. I just mentioned Odd Duck. You know, how does it feel when your own colleagues are looking at you cockeyed, like, what the heck are you doing?
Right.
So it does. I'm used to it. I actually enjoy pushback because, again, it tells me we're not in a bubble.
Right.
And you know, as a portfolio manager, I much prefer to be climbing a wall of worry. Those are the strongest markets, and I do believe when value, when we rotate out of value, we'll come back into innovation.
So we've talked Tesla. We've talked a little bit. Tell me a little bit more about Bitcoin and where you see, I mean, I've never seen anything so debated. Obviously, we're seeing more legitimization as we see regulators, certainly in the US and around the world, moving forward. Today was a big day. What is the long-term play when it comes to something like cryptocurrencies and Bitcoin?
Coinbase. Sorry, guys, had something in my throat.
So Bitcoin specifically, we got involved when it was a $6 billion market cap, and here's Art Laffer again in my life and in ARC's life. It was a $6 billion cap then. Now it's over $1 trillion, which is, but we were asking the question, this was 2015, could Bitcoin serve the three roles of money? And we came to the conclusion that it was possible. Art Laffer collaborated, he tore our original paper up, and as we were going through it, he said, this is the rules-based monetary system I've been waiting for since we left the gold exchange standard, 1971.
Right.
And I said to him, oh, how big could this be? And he said, well, how big is the US monetary base? And back then, remember, this is a $6 billion cap. Back then, it was a $4.5 trillion monetary base. Today, we're at $8.5 trillion, and Bitcoin's at $1 trillion. And that's just one of its roles. I think the most fascinating thing that's happening is in El Salvador. Have you heard? They deemed Bitcoin, the president, who tweets every day, deemed Bitcoin legal tender.
It was a Bloomberg quiz question.
Okay.
We do it every week. Anyway.
Okay. And sent a Chivo wallet to everyone in the population eligible, so 4 million. 3 million, it had $30 worth of Bitcoin in it. 3 million have downloaded it. Only 1.2 million in that country have a banking relationship. So this is the new bank, digital wallets, and it's going to be true in this country, it's going to be true around the world.
Once again, I'm in complete agreement with Cathie Wood here. I'm bullish on crypto, bullish on Bitcoin, bullish on Ethereum. If you guys haven't seen the story of how I unfortunately lost 141 Bitcoin back in the day, check out the card in the corner. Of course, that being said, in terms of risk reward, I'm far more bullish on Tesla stock, which is where all my spare money is still going today. But I do want to point that out. Just because I don't own a huge amount of Bitcoin today, in fact it's 0.01, maybe 0.001% of my entire portfolio by value, I'm still quite bullish. I think cryptocurrencies have a great future ahead. Cathie Wood's absolutely right. These types of digital wallets are going to replace traditional/legacy banking. Hope you guys and girls have enjoyed this video. Let me know in the comments below, what's your guess for the year that ARK Invest will sell entirely out of their Tesla stock position? Even if it's 2069. Also, are you bullish on cryptocurrencies? Let me know what crypto you own. What percent of your overall portfolio are your cryptocurrency holdings? Do you own any NFTs? And of course, don't forget, if you'd like to pick up the ultimate stock market meme merch, check out the link in the description for your What Would Cathie Do shirts, mugs, hoodies, and more. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.